Good morning, you've tuned into ET Now. This is Buy Now, Sell Now. I'm Karunya Rao. With me is Varun Hiramat. Let's kick off the show by first taking a look at how the markets are faring right now. Definitely significantly lower from the day's high of about 13,967 when the markets were looking very, very resilient, and 14K as a milestone seemed very close to the site. But right now we have slipped about 85, 90 odd points from that point onward. Right now trading below 13,900, 13,870 is where we're exactly perched at. SENSEX has also come off from the day's high significantly. Right now trading completely flat. Nifty in fact has turned red and trading with marginal losses at this juncture. But even the advanced decline ratio has drastically changed. Earlier on in the session, there were just a handful of about 3-4 names which were in the red. Right now, we're looking at 30 stocks declining in trade versus 20 advancing as far as the Nifty 50 index goes. Where's the pressure coming from? When all the indices opened firmly in the green, right now you're looking at a Nifty Auto down 0.6%. Metal index has lost more than 1%. Media index has shed 1.5%. Realty index is down 1.2%. What's capping the downside still is a banking index, which is up 0.6%. Definitely off from the day's highs. PSU banking index also, which was the top sectoral gainer earlier on in the day, right now is trading with a gain of 0.7%. You have the likes of Tata Motors, which is down 2%. NTPC has shed 2%. Nestle, which continues to be a laggard, right now down 1.5%. JSW Steel, Hindalco, ONGC, L&T, Cipla, Tata Steel. Look at the kind of metal names, metal heavyweights, which are dragging the markets lower. But on the flip side, you have some IT and financial names which are capping the downside. You have IndusInd Bank up 3%, HCL Technologies, Tech Mahindra both up about 1.5% each. HDFC Twins managing to hold quite firmly in the trade. You have a Wipro up 0.7% as well. Varun, why don't you fill us in on what's on the cloud today?
Yeah, sure, Karunya. We've definitely flown too close to the sun this morning. I don't think psychologically a lot of investors were prepared for 14,000 because we've just sold off so sharply. But in the context of that, let's look at the cloud this morning before we get to our guests. We have Wipro leading the cloud, buyback opening up, a massive one at that, and shareholders should be fairly excited. I think it's around 9,500 crores that the company plans to return. We then have Rupa & Co, which has a bulk deal. Abacus has bought, prominent name, and we know they like those growth stocks, so keep an eye out for that. We then have Finiotex Chemical, which has seen a bulk deal with Nippon MF as well. Then Dhanuka Agritech doesn't make it into our cloud too often, but MK has upgraded earning estimates and raised the target price by 25%. You now have a nearly 900 rupee target there. We then have Infosys, Nomura's top pick among IT, and they're optimistic on the very large deal momentum. And let's remember, it still trades at a discount to TCS, and it's got similar metrics and similar growth, so why shouldn't that gap be bridged? We then have AU Bank, which is tied up with ICICI Pru for some life insurance products, so they're also making it into the cloud today. We have a 3i Infotech, which says Apex partners might be looking to buy the company out for 1,000 crore. We then have a Tube Investments as well getting in there today as they settle some restructuring guarantee for CG Power acquisition. ICICI Bank, because LIC has sold 2% stake, and PNB, which has completed the IT integration of all the branches, which was previously Union Bank. So that should now start to translate into some synergies for them. So that was the BNSN Stock Cloud this morning. Should have been up on your screens. And now I think we're ready to go over to our guests. They're both ready. Kunal Bothra and Vikas Sethi are with us. Good morning to you both, and thanks for taking up the time as always to join us here on BNSN. Kunal, coming to you first. Such an erratic morning, because when I woke up, I looked at the SGX above 14,000. We pretty much opened just shy of that. In the last half an hour, there's just been a very rapid cool-off. So what really explains that? And maybe it'll go back up at the end of the day, or was this sharp sell-off indicative that we're not quite ready for 14,000 just yet?
Yeah, I think this intraday sell-off which has happened on the index, I for one believe that it's purely based on a couple of important reasons. One of them is the expiry front. During the expiry, we tend to get heightened bit of volatility. The volatility which we've seen last week. So the markets are getting into that kind of a mode where there are many a days where you see frequent volatility on the intraday charts. The other most important reasons, which I believe could be one of the reasons why I believe that the index has gone through corrections, because whenever the index nears a particular psychological strike, and especially a round figure strike like the 13,000 14,000 level, the markets have a tendency to try and scale back lower. There are some adjustments which happen in the options positions, especially on those round of strikes. So those could be a few reasons why the markets have scaled lower on the intraday charts. In such a scenario, I think one of the most important things a trader could probably do is to have a two-pronged approach. One is to try and ensure that for whatever long positions you are having, you need to have a trailing stop loss mechanism. Even if, for example, you keep a 2-day stop loss or a 2-day trading stop loss or 3-day trading stop loss, that itself could be a good enough strategy for the longs which you've been holding on. I'm assuming these are very recent kind of longs. And the second is you look out for the strength on the the indices in the market internals, which are the sectors and which are the stocks which are looking strong even in a falling market. And I think those could be the set of names which could probably try and show strength going forward.
All right. Okay. Well, let's also understand from Kunal what are his high risk and low risk ideas that he has for our viewers.
Well, I've highlighted two banking names, and especially the two PSU banking names which I believe are on the verge of a very strong breakout. First one is Canara Bank. Now, interesting charts on the short-term basis. The stock coming back into the thick of momentum. In fact, on the short-term time frame charts, the stock at 126 approximately. It had given signs of confirmation of a breakout on the short-term time frame charts. These are swing breakouts on Canara Bank. So I expect that the stock could restart a strong uptrend for itself. A potential position target of 144. Stoppers could be kept at 120 on Canara Bank. And the second would be a Bank of Baroda. Again, a very interesting chart. The phenomena of golden crossover, where the 50-day moving averages crosses above the 200-day moving average. That has already happened for Bank of Baroda, and the stock has moved up higher post that as well. So I believe at 62.63, Canara Bank could be a good positional play. Targets of 70 and stoppers at 59.8.
All right, those were the two high and low risk ideas coming in from the technical standpoint. Vikas, why don't you fill us in on the ideas that you've laid out for our viewers for long-term wealth creation?
Yeah, good morning, Varun. Now, as far as my long-term ideas are concerned today, I have a couple of ideas. Actually, I would like to mention three of them. The first stock which I would like to recommend to investors today would be an NCC, Nagarjuna Construction Company. It used to be called earlier. It's a pretty strong company from the infra space, and there are very few companies in the infrastructure space which have a similar kind of a balance sheet which is as strong as the one which NCC has. The company has a pretty strong order book of around 30,000 crores, and then I think since we're hardly about a month away from the union budget, where I seriously feel that there would be increased focus on infrastructure, this company is going to stand to benefit immensely from that. And recently we'd seen marquee investors like Rakesh Jhunjhunwala ji and even Anand Jain increasing their stake in the company. And then the promoters have also announced increasing their stake by way of issue of preferential warrants, and the meeting is lined up for tomorrow. So I remain bullish on the stock. The valuation wise, also the stock looks pretty good. It currently trades at around 58, 59 rupees. I think one should be buying into the stock at the current levels, and in the next 9 to 12 months, I have a target of 90 rupees on the stock. The second stock which I would like to recommend today is Tata Group company from the metal space. The name of the stock is Tata Metallic, which currently trades at around 610 rupees. It's a leading manufacturer of pig iron and ductile pipes. It's actually the first company in the world to start selling pig iron under a brand. Their brand is very popular, and then they're majorly into ductile iron pipes, which finds application in water transportation and water management. And I see tremendous scope for this company as well. Fundamentals are rock solid. You don't have to worry about corporate governance issues. It comes from the stable of Tatas. And this ductile iron pipe division has a collaboration with two Japanese companies, so that will also augur well. So I'm bullish on Tata Metallics from the current levels, and the September quarter results were pretty good. They were excellent actually. if you compare it year on year or vis-a-vis June quarter, they were pretty solid. So I'm bullish on the stock from the current levels of around 610, and I think we could see levels of 800 rupees on the stock in the next 9 to 12 months. And the third idea is a large cap stock which has clearly underperformed the markets. It's run up in the last month or so, but nothing has been done as yet. The name of the stock is ITC. I remain bullish on the stock. The stock currently trades at around 210, 212 levels. I think one should be buying into this stock. It's one of the cheapest FMCG stocks in the listed space. If you look at it from a valuation point of view, it trades at a pretty big discount to its peers like an HUL or a Nestle or a Britannia when you treat it as an FMCG stock. So I think one should be buying into ITC at the current levels of 210, and I think we can see levels of 300 rupees on the stock in a year.
All right, Vikas, thanks for that. 3 stocks he's highlighted for us. But, we'd also like to get your top picks for 2021 for our viewers.
Actually, these are the kind of stocks which I like, and I think if you were to look at one other stock which could do well in 2021, I think it could be Bharti also. Bharti at the current levels looks very good. It's come up from its recent lows of around 400 rupees to the current levels of around 510 odd levels. But I remain bullish on Bharti. The scenario in the telecom sector has changed, and with talks of increased tariffs in the sector, I think Bharti would stand to benefit. And we've seen over the last 2 months, the number of subscribers which Bharti has been adding, they are they're much more compared to even Jio. So I remain bullish on Bharti from the current levels, and I think during 2021 we could again see it touching its earlier highs of close to 650 rupees.
Quite an interesting mix of stocks he's mentioned there. Bharti, ITC, NCC and Tata Metallics. I hope our viewers have taken note. And on that note, let's slip into a quick break here on Buy Now, Sell Now. Stay tuned. We'll be back with viewer queries in just a minute.
Welcome back. You're still watching Buy Now, Sell Now on ET Now. Kunal and Vikas both are standing by, and let's get started then with our viewer queries. First up is an email from Mayank Saxena based in Pune. He wants our experts to suggest a good level to enter Wipro. He's looking at a time horizon of 1 to 2 years. Kunal, let's talk technicals first for Wipro. It saw a stellar run-up from March, April lows all the way up till October, and ever since then the stock has largely been range-bound. Of course, last couple of days it has seen a good spot of about 40-50 bucks. What is your sense on investing at the current levels of about 385, 386 rupees? Is it a good time, or should he wait for some kind of a dip to come and then he could load up on shares?
I think one of the there's one very important lesson over here for all the viewers. I think one of them is that whenever you're looking at buying stocks which have given breakouts on long-term charts, it's not going to be an easy right that you try and buy these stocks at a perfect entry price, because these stocks will be available at at every market rallies or even at market dips at a premium. So the reason why I believe that stocks like Wipro and the other peers of Nifty IT index overall on the large cap and mid cap front, these stocks are looking very attractive is because there's money which is chasing these kind of names, and which is why you'll see every short term dip and corrections being bought into. Given the structure of Wipro, and I think specifically the last 2 quarters of this rally which you've seen, one of the indicators especially which I track very closely, that's the RSI, has given almost a 12-year, 13-year breakout on Wipro on the quarterly charts. Now these are big kind of breakout levels, which one can track. So looking at that kind of a reaction, I would be of the belief that many IT stocks, including Wipro, they could probably have confirmed a start of a strong uptrend. Now, whenever you try and buy these stocks, you enter at the at the first price which is available to you with a moderate kind of a quantity, and then depending on your purchase price at a 5% or a 10% dip, if these stocks give you those opportunity which which happens in a a phase of market correction, these are the kind of dips where you should try and average it out further and try to bring your cost price lower and increase the quantity as well. I think that's a much better strategy when you're looking to buy stocks like Wipro.
Thanks for that, Kunal. Vikas, what about you? What's your take on a Wipro?
Yeah, Varun, Wipro, it's a good quality stock. The stock has run up of late, and today their buyback also has started at the rate of 400 rupees per share. The stock would certainly do well from here also, and I would advise the investor to be buying into the stock on correction to levels of around 360, 370. But if I were to choose from the large cap IT stocks, I think my preference would be Infosys and HCL Tech over Wipro. I think these two stocks would outperform Wipro in the medium to longer term. So if he has a choice, I think he should go with Infosys or an HCL Tech rather than Wipro.
Okay, got that point. Basically, these IT stocks are all going to do well. They're all winning big deals. But like Vikas just pointed out, Infosys and TechM are pegged to perhaps give you incremental upside a little faster than a TCS or a Wipro. So thanks for that. Let's move forward. Our next query brings into focus the retail sector, and it's revolving around Trent. Anisha Bajaj of Raipur would like to know if Trent is a good bet from a 6 to 12 month view. So Kunal, I mean, Trent would firmly fit into the reopening trade, right? And if we now have vaccinations coming up in 2-3 months, and regardless that it might take longer here in India, you might see Trent reacting to that, or are we going to have to wait for earnings for it to recover further from here?
No, I think it's possible that the stock could probably react in much anticipation of once the vaccine is out and when it's doled out to individuals. So I think in that regards there could be a possibility that you might see the stock moving up higher much before the actual reopening begins. But then on the charts as well, remember that this is not a very high liquid and a high momentum kind of a stock. The stock has a tendency of moving into gradual phases of uptrend. For example, I think from the March lows, yes, you can say that from the March lows, the stock has doubled from 400 odd levels to 800. But then it's done through this rise in a very gradual kind of a manner. Now, in such kind of stocks, I think it's a much better strategy to use corrections, whether it's a 10% or 15% correction, as good buying opportunities, because the stocks, these kind of gradual rises, they tend to have a tendency of giving you those drawdowns or giving you those corrections in between. From the November highs of 800, the stock is already at 680 level. So I think it's a good time to start buying Trend at current levels in the anticipation that the trend which has started from March in 2020, that would continue for a longer duration of time for Trend.
Okay, Vikas, your view on Trend now that businesses, shops, retail formats are opening up, and there is still a lot of pent-up demand, especially with chains like Westside, which is a department store format, with Star Bazaar, which is essentials, with a solid tie-up with a brand like Zara. How do you see Trend panning out over the next 1 odd year? I mean, because the time horizon for our viewers is 6 to 12 months, what would be your recommendation?
Yeah, Karunya, I like the stock. The stock has corrected from its recent highs, and with the kind of brands which it has under its fold, the names which it just told, like Westside and Zara and Star Bazaar, I think they would do well once we get back to normalcy. So I'm bullish on the stock at the current levels, and I think one should be buying into the stock in a staggered manner, meaning buying some quantity at the current levels and using every correction to be buying into the stock furthermore. And my targets in a year's time would be 900 rupees on the stock. So it's a buy call.
Okay, well, it's a consensus thumbs up then coming in for Trent. Moving on to our third email for the day, Mikhail Pardiwala from Mumbai writes to us. He invested in AU Bank at 1100 rupees a piece in March this year. Given that it has recovered a fair bit and it's nearing that level, Should he book out or should he stay invested? That's the question he wants to be addressed. Kunal, right now the stock is at 850, 860 levels. He's still making some losses on this investment. So would you want him to average, book out, or just stay put?
It's going to be a bit tricky because the stock charts have recovered quite well from 400 to almost at one point the stock was in touching distance of breaking the 1,000 mark. So it's been one of the banking names which has recovered quite well, but it's not recovered the entire loss like how the large cap stocks like maybe an HDFC Bank or Kotak Bank have done it. So I think yes, in that regards there is this inherent underperformance from AU Bank. But then the prospect going forward, the fact that the stock has recovered quite well, it's moved into a very steady kind of an uptrend. There have been periods when the stock rally has been very fierce and ferocious, and at times the stock has consolidated. So all of those characteristics are quite well. Now, if you are in from a longer term perspective, then I believe you should use corrections and dips as a good strategy to try and average out your holdings, both in terms of your quantity as well as trying to lower your cost price. So the stock has a tendency of coming back to a 200-day moving average almost in every 3 months odd. So if there is a correction which could be due and the stock comes back to say a 700 750 zone, I think that could be a good opportunity for you to try and average out further. So I would suggest a hold and wait for a correction at least till that zone of 700 to 750, which is near the 200-day moving average, to try and average out further.
Okay, thanks for that, Kunal. AU is an expensive bank, even at this price, so I get that. Vikas, coming to you, housing finance companies are pegged to do very well, perhaps even better than some of the banks. So maybe our viewer can explore a switch from AU Bank to Aavas. What's your take on that, or do you think he should stay put here?
As far as AU Finance Bank is concerned, first I would like to sympathize with the investor for having bought into the stock at such high price. And the stock had corrected quite dramatically in the month of March, but then from there on it has sharply rallied to the current levels of around 850. I think it would be better for the investor to switch out of this stock, meaning he could book his losses at the current levels. And even if he wanted to remain with the banking sector, I think there are several other banks which would be faster in giving him returns. And I think he needs a 30% upside in the bank to be able to reach his cost of acquisition. So I think he would do better to be buying into a public sector bank like a Bank of Baroda, which Kunal had also talked about just a wee bit back. So I think at the current levels of 62 rupees, Bank of Baroda looks good and looks set for an upside of 30 to 40% in the next 1 year. So I think I would advise him to book his losses in AU Finance Bank and switch to a bank like a Bank of Baroda at the current levels.
Okay, great, Vikas. Thanks for that. So both are experts differing slightly, but prudent advice, and you can take your own call. Let's move forward to our next query then. Rohan Arya of Calcutta writes to us, and coincidentally, he's writing to us about First Source Solutions, which belongs to Sanjeev Goenka, and who's also based in Calcutta. So he's investing locally, I guess. But, Kunal, this stock has gone from 65 rupees, I'm just looking at the chart, to 109 bucks in 4 or 5 trading sessions, and today it's cooling off slightly. Since the viewer's question is it still a good time to buy, what would you advise?
To book profits on such kind of names, when you generally see these kind of ferocious up move in a very contracted kind of a time period, 4 days, 5 days, 1 week, a couple of weeks, I think that generally indicates that it's good time to try and book out profits. One of the simple indicators to try and watch out for is look at the 200-day moving average. The 200 DMA for FSL is at 53, and the stock approximately above its 200 moving average. That's the kind of over exaggeration of the trend is for FSL. So in such kind of a scenario, because of the recent uptrend and because of the fact that the stock is way beyond above its long-term averages, I think it's a prudent strategy to try and book out profits over here. Only if the stock comes back to the levels of 65, 75 yet again, which is apparently one of the major support zones for FSL, I think that could be a good level for you to enter. But that still is around 30 rupees lower from current levels. So I would suggest book out profits and wait for a significant correction if you want to look to buy FSL.
Vikas, your view on First Source?
Again, a good quality stock, but it has run up pretty fast in a pretty quick time. Over the last 3 or 4 trading sessions, it has gone up from 75 odd levels to the current levels of 110. And I was just looking for some news in the stock, and they've just done a small acquisition recently, but that does not mean the stock should have gone up this much. So at the current levels, the stock has started looking a bit expensive. It used to be looking good at the levels of around 70 when the dividend yield was also close to around 3 to 4%. So it's a growing company and it's doing well, but I think at the current levels, one should be booking out. If one has already bought into the stock, then I would advise profit booking at the current levels. Or if one wants to buy the stock, then I think one should wait for correction to, again, levels of around 80, 85 rupees when one can again safely buy into the stock.
All right, thanks for your view there on First Source. Request you both to stay on with us. We have 2 more queries to address. We're slipping into break right now, but we'll address those queries when we come back.
Hi, welcome back to ET Now. You're watching Buy Now, Sell Now. Both our experts are still with us, Kunal and Vikas, and we have 2 more queries to get through, so let's address them. We have Gujarat Fluorochem, and Nikunj from Mumbai has written to us. He feels that the company's underperformed, given the size. It's an Inox Group company, and it's got in a sense, it's a pioneer in fluorine chemistry, and some other companies like Naveen Fluorine have done much better in the last year or 2. So, Kunal, coming to you first, what would your recommendation be to Nikunj? Can you get in now, or would you perhaps wait for some earnings or delivery to come out before you make that call?
Yeah, I think we'll wait for some bit of correction into these names to try and average out further or look to buy. I think these stocks have run up significantly high, and I think as it is, it's not a highly liquid kind of stock as well. So there are a lot of restrictions over here. And I think the one very important point to note is that these stocks, they tend to flourish and blossom when the markets are into a very strong into very strong bullish zone, because the sentiment is very optimistic in those times. And so it's possible that we are into such kind of a phase where these mid cap stocks are seeing a very strong upside. But I think it's more important to try and buy these stocks when there is absolute there is less noise in the market, and which is why you'll get these stocks probably at a much lower level. So I would suggest that you wait for a significant correction into these names to try and buy it.
Vikas, do you agree with Kunal's view?
Karna, I differ slight from Kunal's views. I track this company closely. Fundamentals are pretty solid. The company is into fluorochemicals as well as refrigerants. And if you look at their September quarter results, they were pretty impressive. The company reported a profit of close to 80 crores versus around 18-20 crores in the September quarter of last year. So I am very bullish on the stock, and I would recommend a buy at the current levels of around 570. And one more trigger which could be working in their favor would be their refrigerant business. They sell refrigerants under the brand name Refron, which is a pretty popular brand among refrigerants, and they come out with products like R32, R22, which are technical names, but then which would find application in the refrigeration requirement for transportation of the corona vaccine. So I'm bullish on the stock, and I think one should be buying into the stock from a long-term point of view. I think the stock can easily double from here in the next, say, 1.5 years.
All right, then that's a bit of a divergent view coming in there for Gujarat Fluoro. Moving on to our last and final query for the day, Tarini Patel writes to us from Surat. She wants our experts' view on Tata Motors now that the Brexit overhang is behind us. Is it a good time to get in? Kunal, the stock has started to strongly move upward, especially in the recent past if you look at the chart. Is this a good level to enter into it, or do you foresee any further dips or corrections perhaps when an investor could enter into Tata Motors?
has a tendency of trying to give you those corrections along the way. So we've seen corrections happening in the month of August. I think just recently, last week or prior to that, there was a correction where the stock corrected from 188, 189, I think if I'm not wrong, to sub 160 levels as well. So there is this odd 10% odd correction which keeps on coming along the way for Tata Motors. And I think that's a much better time to time buy these stocks. But one thing is very, very important for a stock like Tata Motors, because when the rally actually started for the stock from the 70 sub 80 levels for the stock, it was met with a lot of pessimism. I remember clearly when the stock was at 100 plus levels, where it had confirmed a breakout of the 200 moving averages and such long-term indicators, there was still a lot of pessimism into the stock prices. So the first wave of the rally generally starts with the pessimistic, views from many investors, and then the second wave is where you see a confirmation of news flow getting attached to the stock price that gets converted into a strong trending name. So I think Tata Motors I for one believe, is into that kind of a trending phase where it's possible that the news flow is now trying to complement the stock price move. So I think in that regards, it's a good stock where you can look to buy on dips and hold for a longer term view.
Okay, buy on dip strategy from Kunal. Vikas, how about you? How are you viewing Tata Motors right now? You think maybe we'll get a cool off and a better chance to enter?
I share similar views as Kunal's. I think the stock has run up quite significantly over the last few months from its recent lows. But I think there's much more upside left. But since the stock has already run up, one could wait for some correction to buy into the stock. I think levels of around 165, 170 would be pretty good levels to enter the stock. And I think we can easily see levels of 225 to 240 rupees on the stock in the next 9 to 12 months.
Okay. So in a way, I guess both our experts have a thumbs up for Tata Motors, just advising you to wait for those good opportunities when you might get a nice correction. And then the target, of course, is still 220 rupees. A big thank you to both our guests. On that note, we are now done with queries. Always great to get perspective from you. Thank you so much. We're now heading towards a break, but before we do, we've been bringing multi-bagger stocks to your attention as part of one of the things we're doing on the channel lately. We're trying to highlight some of the best performing stocks of 2020. Yesterday we spoke of Borosil Renewables, my colleague Vivek did, which is on 10% upper circuit today. Today I'm going to talk about RT Drugs, which has been, it was a 150 rupee stock. In the peak it went to over 1,000 if that chart can be pulled up. Currently at 700 bucks, we're still sitting on a 4.5x YTD gain. Margins have really shot up for this company. They used to do 12-13% EBITDA margins in any quarter. The last 2 quarters have been 20-25%, so they're obviously generating a lot more cash. The debtor days have also come down. So the receivables used to be 110 to 120 days. Latest ones are 90 days. The ROCs have gone up to plus 20%. So it's definitely re-rated massively. They are now entering an investment cycle, which is why gains might be muted for a bit. They're going to spend, I believe, around 400 to 500 crores, and that should enable them to target revenues of around 1,500 crores. And management's quite confident that the realizations will continue to trend upwards with the new capex, which will be a combination of greenfield, which is new projects, and then backward integration. So they'll be making some of their own raw materials to protect their margins. So that's RT Drugs. It's been one of the best performers this year, and the outlook still remains fairly bullish for next year. But on that note, we'll now slip into a break and be back shortly. Stay tuned.